So last month, the Dow Jones fell 4.16% and the S&P 500 dropped 4.79%. They've since recovered somewhat, but if you were on YouTube during the final week or so in September, you'd have thought we were facing another financial crisis of epic proportion. I mean, the millennial money gang talked for more than an hour about the market crash, and individually, personal finance superstar Graham Stephan told us to stop buying stocks because everything is falling and that he sold out and is giving up on the stock market. Andre Jig was less dramatic, but wanted you to know that 2008 will happen again and we're about to run out of money. And Jeremy from Financial Education must have caught the Meet Kevin bug because he's been pumping videos after videos talking about why stocks are dropping like a rock, how the stock market is about to flip, that Evergrande is just the tip of the iceberg, and why the stock market is crashing. And as for Meet Kevin, well, he posted way too much FUD videos to screenshot individually, so here are all of his September market crash videos highlighted in red. It's not just YouTubers. CNBC wanted everyone to know that the Dow Jones fell and 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 fell. But to be honest, every time I read these dramatic headlines that the Dow drops 500 points, it just makes me laugh. I mean, sure, 500 points sounds like a massive crash, but at the current level, it just means the Dow Jones is down less than 1.5%. In comparison, this is a 2001 New York Times article when the Dow also dropped more than 500 points. The difference, unlike last month's 500-point drop, is that this 500-point drop was equivalent to a 5.4% decline and happened after Wall Street started trading again following September 11. And sure, my portfolio ended September down 2.6% or a loss of $1,130.62, but I can't compare it to what investors must have experienced when stocks started trading again after the deadliest terrorist attack in human history. So the next time your favorite personal finance YouTuber releases another doom and gloom video about how another red day is the huge catalyst predicting the next stock market crash and economic recession, I want you to zoom out. I want you to take a deep breath and zoom out. I'm serious. Ignore the short-term noises caused by YouTubers and business channels who stroke fear to get more views and clicks because that's how they make money, and just zoom out. Go on CNBC, Yahoo Finance, or wherever else you can find the Dow Jones and zoom out. Because if you do that, the super devastating 4.16% Dow Jones market crash of September of 2021 is replaced by a positive 2.9% in the 6 months' time, a decent 21.6% in the 1 year, an insane 88.68% in 5 years, and if we go all the way back to 1981, the Dow Jones is up a life-changing 3,842.38%. And all these constant neon green dying post-California governor race midlife crisis live streams by Meet Kevin in the 24/7 business news cycles can trick you into thinking you need to be on top of every breaking stock market news story. But that's not what makes a successful investor. If you want to become a successful investor, listen to this 2019 Warren Buffett interview when he was asked about Apple.
Let's talk a little bit about Apple. Everyone always wants to talk about Apple, right? It's kind of the it stock, the it company. You have a $45 billion stake, more or less. How closely do you follow the company? You know, people are concerned they haven't really introduced any new products.
Well, if you have to closely follow a company, you shouldn't own it.
Really?
No. I mean, if you buy a business, if you buy a farm, you go up and look, every couple of weeks to see how far the corn is up, and you worry too much about whether somebody says this is going to be a year of low prices because exports are being affected or anything like that. You buy a farm and you hold it for. I've got one farm that I bought in the 1980s, and my son runs it, but I've been there once. I mean, it doesn't grow faster if I go and stare at it. I can't cheer for it. More effort, or something like that. And I know there's going to be some years when prices are going to be good, and some when the prices aren't going to be good. I know there's years when yields will be better than others. But about the farm, if it just doesn't, I don't care about economic predictions on it or anything of the sort. I do care that over the years it's well tended to in terms of rotating crops, and I hope yields get better, which they generally have. In fact, that farm 100 years ago would have probably produced 30 bushels, maybe 35 bushels of corn per acre, and now in a good year, it'd be 200. I mean, we really made progress in this country. That's one reason commodity prices, if you go back a couple hundred years, they've moved so little, is because we've just gotten better and better at whether it's cotton or whether it's corn or soybeans or all kinds of things. And you and I have benefited from that.
And so Apple is kind of like a farm.
Well, it's a long-term investment.
It is this long-term mindset that has earned Warren Buffett billions of dollars, and since this interview was released, Apple shares have gone up almost 200%. In addition, Warren Buffett famously said that we should only buy something that we'd be perfectly happy to hold if the stock market shut down for 10 years. Having a long-term outlook for companies you invest in and doing the proper due diligence will give you peace of mind when the market decides to dip or flop or flip or fall for whatever reason. And that's what I've been doing with my own portfolio. I dollar cost average into the companies I believe in, and I usually log maybe once a day to check up on it. And for anyone curious, I use M1 Finance for all my investing needs. If you'd like to get started investing for free on like a specific fee-based investing app Graham Stephan got paid to tell you to use, click my referral link below to receive your free $30 to get started today. But let's finish off this video rant with a portfolio update for the month of September. Like I mentioned earlier, it's down compared to August and ended September with a total balance of $42,368.14. And so far, I put in $32,010, giving me an unrealized portfolio gain of $10,358.14. And this is so totally amazing, you guys. I received nearly double the dividend compared to August. The biggest payouts came from Otis Worldwide, Microsoft, and Visa. While in previous months I used to hold 5 to 10% of my portfolio in cash, I decided to just invest everything as soon as I deposit it because A, I'll probably miss out on the move up because I'm waiting for a dip that might not even come, and B, M1 Finance has this cool feature where it automatically buys whatever stock is down the most. So for example, seeing how Alibaba is my worst performing stock right now, it buy more BABA and work its way down the list based on my stock allocation. Portfolio return is up and down all over the place, but at least for September, it ended up 32.36% in lifetime return and 10.50% on an annual basis. Compound that over 30 years, it means I'll have almost $850,000 even if I stop contributing any money, which is always nice to see. And to finish off, two exciting pieces of news. I earned $30 in September thanks to one of you lovely people using my referral link below to sign up to M1 Finance, because not only does the link give you $30 for free after signing up, you'll be also helping me, a starving YouTuber, in the process. And finally, the channel is getting really close to hitting the 4-digit subscriber milestone, and we ended September with 962 subscribers. We might actually hit 1,000 subs before October ends, which means I better get started on my heartfelt speech and practice my single teardrop emotional crying. But on a serious note, thanks for listening to my FUD rant and portfolio update. A like and sub and comment is always appreciated. But with all that said, have a swell day, good luck on your investing journey, and I'll catch y'all next time with more financial shenanigans.